Well, we're coming to the end of the week here on the 20th of June, and despite or including the euro bouncing up off of support, it's been kind of an interesting week as traders seesaw back and forth about interest rates. That's one of the reasons why I'm starting this particular video by looking at the TNX. For those of you who are not familiar with it, this is the yield index for the 10-year Treasury note. So this is it's a good measure of what investors think longer-term interest rates are going to go, and it rises when the bond market is declining. So when stocks are on the rise, it rises, which it's been much more durable actually than the stock market has recently. The decline here as a percentage has been much less than what happened in the stock market. But that's not really what's important. What's going on, of course, today, the big news, and the dollar is losing quite a bit of ground, is traders are getting concerned about the likelihood of increased interest rates with a resurgence of credit market concerns. So specifically, traders are not only getting concerned about resurgence of credit market issues, but there's been a lot of buzz leaked intentionally or unintentionally out of the Fed that the market may have been overestimating what Chairman Bernanke is really planning, or the committee is really planning to do with interest rates in the short term. So what we're seeing, and I'm going to zoom in here a little bit on this breakout that has been occurring, because specifically I'm looking at two things. Now, number one, you'll notice that there's this little gap up here. We get this little gap up on June 12th, and then the market is beginning to reverse and really losing quite a bit of steam. It's Friday, it's before the weekend. When you end the week with news like this, there is the potential that we could see another gap down. Well, that's interesting because that creates a specific technical pattern that I've actually had quite a bit of success with, and that's a island reversal. That happens when the market gaps up, loses momentum, and then gaps back down. Big downside potential following those. Let me give you an example. You can see here going back just a little bit of the gap up and subsequent decline there in February. You'll also notice another one. This one's actually, I think, a little bit better example, a little gap up. And typically these gaps, so you can see it here between the 28th and the 31st of December, the gap up between the 6th and the 7th of December here as another island reversal. Specifically, what we're looking for is that this indicates a market is extended beyond its normal range, if you will. You'll also notice at the same time we've got a little technical divergence occurring on a number of oscillators, but specifically one that I use quite a bit, which is the CCI. So what's occurring here is that we're getting lower tops, lower major tops over the end of May and June, these two rallies, at the same time that we're getting very dramatically higher tops in the market. This is indicative of an overextended market. Now, we're talking about bond yields here. How does this matter to forex traders? How can we apply this information? Well, in a couple of ways. Number one, the TNX is like the stock market, is a bit of a measure for investor risk, and right now investors are saying that they're pulling out of risk a little bit, or they're correcting for risk, because as the yields go down, that means that bonds are climbing. Demand for bonds is growing. Now, not very much, but it is still a subtle message that we need to listen to. Additionally, there are currencies that are sensitive to changes in the interest rate environment. So specifically, as we start to look at our our trade planning process, I'm looking for a couple of things to happen. I think there's a very high risk that the market is going to pop down here on the TNX, and that's going to expose it to a much larger correction to the downside. Well, at this point, we can start to look at currencies that are going to be sensitive to that to not only potentially find an opportunity, but it may be if we're in a position that's opposite of that direction, then we look at that as a higher risk for reversal. Maybe we should apply some coverage or a hedge. Let me give you an example of that. For those of you who've been watching the same thing, I've had this support line here drawn for, well, since last year. Just watching that as the market continues to struggle against this diagonal former support of this channel that we were watching in the middle of last year. So the market bounced off of it here in February. That was a big correction and is now consolidating against that same level in this little pattern here. So we're seeing another channel, a potential for a breakout to the downside here. Let's zoom in again. I'm going to adjust this channel line. All right, so we're seeing it again struggling against that upper level, beginning to come down. The dollar franc, you'll also notice that recently it kind of mirrors the stock market and the as well as the TNX. So and the franc will follow yields to a certain perspective in that as yields fall, the franc will strengthen a little bit. So that's not necessarily because one causes the other, but rather that they're related to some of the same issues, the franc being seen as kind of a shelter during times of uncertainty. Well, as the market's been channeling so tight over the last couple of weeks, this makes for a very interesting opportunity, maybe a couple of hundred pips to the downside in the short term, and a break of this support level could be much greater down below parity in the near term. So it's one that we're watching, and how I would apply that information that we're seeing on the TNX for right now into the Forex. By the way, I have to make a couple of comments just as a little follow-up. The island reversals also work to the upside. You'll notice one here that occurred in March and April to the upside. I'm drawing a line through the gap here at the very end of February, and then of course here in the middle of April, pushing the market quite a bit to the upside. So that's one that I watch for quite a bit. And a lot of Forex traders don't see these because we're so used to the Forex not having gaps. So it's interesting to look at another market and see, well, there's a potential gap forming here, especially over a weekend. Let's apply that same analysis, not necessarily taking an investment on the TNX, but rather looking for an interest rate sensitive currency like the franc.